You earn the income, and that income gets deposited in someone else's bank. They see the money before you do. And do you think the banker is just letting that money sit still? Or are they putting it to work? They're putting it to work for who? Not for you and I. They're putting it to work for the shareholders of the bank to create more profit. And so they're using our capital to build their business. That sounds a lot like a problem to me. So you access the money, you pay your bills, and somebody else has already made money off of your money. And whenever you pay a bill or access that money, it's a permanent transfer of capital away from you and your family for the rest of time. You can never get it back. In other words, you're doing all the work and someone else is getting all of your money. How does that make you feel?
Welcome to the Becoming Your Own Banker webinar. We're delighted to have you here with us. Vern McCarty is presenting this evening, and I have the great pleasure of introducing him. Vern has been in the insurance business for 10 years. He was motivated to help people with the same problem his family struggled with for generations: a lack of financial education, resources, control, and freedom. Vern wanted to focus on solutions, not products. So he went on a mission to discover clear solutions to the problem. 4 years ago, Vern started implementing the process of becoming your own banker, the infinite banking concept, in his own life. He and his family went from having debt and stressing about money, constantly feeling like they were going backwards, to no longer being stressed about money. A life-changing moment for Vern about the power of this process was when his wife, Christelle, told him that she is no longer stressed about money. Vern's family is now cash confident. They have control as they can access funds whenever they need on their terms, while getting all the money back they used to send to someone else's bank. Vern has now helped hundreds of clients transition onto the same path. He is passionate about helping more Canadians spend their lives living rather than being stressed about money. Please welcome from the Ascendant financial team, the amazing coach, mentor, and infinite banking practitioner, Vern McCarty. Take it away, Vern.
All right. Wow, Liz, thanks so much for that warm introduction. I so appreciate that. Welcome, everybody. Thanks so much for being here. Congratulations for taking the action to join us tonight. I'm going to do my very best, just like Liz said, for nearly half a decade now. I'm going to take all of the information that I've learned throughout this process, working with clients every single day and learning from my great colleagues, to share and add some great value tonight and make sure that you have good clarity. Now, before I jump in, I want you just to take a moment, take a deep breath, relax, get yourself into a quiet space where you can focus and have a pen ready to go so you can write down some questions and take some good notes, because this whole night is all about you. You are here for you. So I just want to give you a second just to get present, let go of the worries of the day, and let's get after it, okay? So I'm going to go ahead and share my screen here. Welcome to the Becoming Your Own Banker, the Infinite Banking Concept webinar. Now, who was R. Nelson Nash? Who was R. Nelson Nash? Before we ask who or answer that question, let's just do a little bit of a fun thought experiment here and think about who revolutionized the automobile industry with the Model T. If you said Henry Ford, you are correct. Well, who created amusement parks and pioneered cartoons and films, including Mickey Mouse? Well, it wasn't Mickey Mouse, it was Walt Disney. Well, who revolutionized a process to enable you to become your own banker? That is the great and powerful R. Nelson Nash. We're blessed beyond the definition of good fortune to have been mentored by R. Nelson Nash. Many of our colleagues mentored directly with R. Nelson Nash and knew him very well personally. So God rest his soul. Now, Nelson was known for this famous quote here. Ever since 1994, Nelson has been free from the commercial banking system. His family has never had to rely on the commercial banks for the need for financing since 1994. And at that time, he created this quote, and he used it many, many times. He said, "What a peaceful, stress-free way of life it is when you get the banks out of your life." Now, by the end of the webinar tonight, you are going to know that you are capable of becoming your own banker. You're going to have clarity on the problem. Now, before we understand a solution or worry about a solution, we need to be really clear what the problem is. And you will have clarity on the solution. And you're going to know what you can do. This is all about putting you in the driver's seat and empowering you to become your own banker. You'll feel like this. This is a past participant who emailed us this afterwards. He said, I found hope and a new belief in a way that I could create my own peaceful, stress-free financial life. And what is the opposite of being stress-free? Oh, let's have a little bit of fun tonight, okay? Every time I see this little girl, I just laugh because it's hilarious. We've all felt this way a time or two, haven't we? Particularly when dealing with banks, I'm sure. Now, you've been told to put your money into mutual funds, commodities, stocks, bonds, and you essentially put your money into a financial prison. And when you need access to more capital, you have to go to someone else's bank. I say that again, you have to go to someone else's bank when you need access to more money. And that is absurd. And I'm telling you that if you've been handing control of your money over to somebody else, you might not be in the best situation right now. But it's okay, because it's not your fault. We all do the best we can with the knowledge and resources that we have. It's not your fault. Now, are you committed to discovering becoming your own banker? And this is where you can go ahead and have some participation if you're not shy. Are you committed to becoming your own banker? Are you committed, excuse me, are you committed to becoming your own banker? Are you committed to improve anything that you're now doing that is preventing you from becoming your own banker? Well, welcome to commitment. Enjoy your stay. When you get committed to things in life, things happen. Now, I discovered the path of peaceful, stress-free financial life the hard way. Now, I want to share a little bit about my IBC journey with you. But before I do that, throughout the night, at any point tonight, you might find yourself thinking, gosh, I would love to talk to somebody about this process. I would love to learn more. I have some questions. You've already been texted and emailed a link to schedule a call. It's included with the webinar. It's a 15-minute discovery call just to help create some clarity and establish a basis to work together and see if we can help you implement the process of becoming your own banker and make sure that you're crystal clear. You can also text the word schedule to 780-809-4599. Now, when I was growing up, I didn't get exposed to a lot of money conversations. I'm very grateful. I'm blessed to live in Canada. I love my family, all those things, but we didn't have a lot growing up. I grew up seeing other kids go on vacations and have, the toys and the fun and all those kinds of things. And from a very young age, I said to myself, I was like, you know what? I never, had a grudge against my parents. I love them, but I said, when I become an adult, I'm going to be able to create opportunities for my kids. I'm going to bring my kids to have those experiences and those things that I didn't get to enjoy. I'm sure you had some of those conversations with yourself as well. Now, fast forward a few years later, when I was, in my early 20s, I sort of defaulted into the construction industry. There's nothing wrong with the construction industry. I made some great friends, had some great times. But if you do it by choice, that's one thing. I certainly didn't do it by choice. Now, I followed a lot of the same mainstream advice that we always hear. I put my money into savings accounts and RSPs, and I financed vehicles and things like that. And I tried to find the lowest interest rate that I could and all that sort of stuff. And what I did was I started to read books. Imagine that, what a concept. I started to read books and learn about personal development and learn about, money and business and cash flow and all these sorts of things. But like Nelson would say, I actually tried to get too much done in too little time. So I kind of jumped into deals and I tried to rush the process, and I made a lot of mistakes. I don't know if that's ever happened to you. I made a lot of mistakes and I had to spend a lot of time cleaning that up. So it was very stressful, and all I kept seeing was money flow away from me and my family. And as Liz mentioned, about 10 years ago, I got into the financial services industry. I heard this buzzword called financial advisor, and I thought, okay, well, I want to help people. And that makes sense. If I become a financial advisor, I can learn how to not only help other people, but I can help my family as well. Now, I don't want to take a stab at the industry or any of my colleagues or anything like that. Everyone does the best they can, as I said, with the knowledge and resources that they had. But how it occurred to me quite quickly, I learned that this wasn't really about, really helping people increase their cash flow or manage their money or get out of debt. It was all about pushing product. You had to sell product in order to survive. So what I did was I naturally gravitated toward insurance, life insurance, whole life insurance on kids. I had a mutual fund license, but I didn't do any of the mutual funds or any of the investments, that sort of thing. It didn't really sit well with me. It didn't feel right, So I knew I was in the right place. I just wasn't in the right system. I wasn't with the right team. And way back in 2013, that's when I first discovered this book. I just first discovered the process of becoming your own banker back in 2013. Well, I don't know about you, but at that time in my life, I simply was not the human being that I needed to be able to implement this process. I didn't have the right people around me. Nobody knew about becoming your own banker. And so unfortunately, I didn't do the work that was required in order for me. I wasn't committed. I wasn't committed at that time. So what I continued to do was try to stick my square peg into a round hole. And I really just fell into survival mode. This business, although I'm super grateful, it is very challenging. You're responsible for all of your own marketing, and you got to look after your clients, and you got to find people who have the need for the problem that you solve. And I was struggling. I was in survival mode. And so ending 2017, heading into 2018, I kind of was like, I'm not getting out of this business. But I actually had all of the course materials. I had all the books that I needed. I actually enrolled in the Infinite Banking Practitioner Program through the Nelson Nash Institute years before that, but I didn't do the work. So what I did was I said, you know what? I got to get committed. I read the materials, I logged on, I watched the videos, I scheduled my exam, and then I got my authorization. And there's an age-old saying that says, when the student is ready, the teacher will appear. And my dear friend and my good colleague, Richard Canfield, came into my life, and he became my first mentor in the process of becoming your own banker, the infinite banking concept. And he helped me and my family get some of our policies set up correctly, our system set up. And he helped me work with some other clients. And then I called him up one day, almost a year later, and I said, hey, Rich, I really appreciate you, man. I love you. You're awesome. But I know you're doing your own thing. I'm looking for a team. I'm looking for a mission. I want to be a part of something big. I'm lonely down here, And he was gracious enough to introduce me to the founder of Ascendant Financial, Jason Lowe. And the rest, as they say, is history. It's been 2 years now that I've been working with Ascendant Financial and helping to build this business and work with good people just like you every single day. And since then, everything has just gotten better. So thank you for allowing me to share all that. I hope that adds some value to help you understand that, it's a process and it's a journey for everybody. So wherever you're at right now is the perfect place. So this is a great picture of, you can see me in the background there. I don't know if you can tell, I'm a little thicker in that photo. And that's my friend Sarblo. He has his fancy COVID cut there. If many of you know him, I'm sure. And my friend David, and that's obviously Jason Lowe there in the front. And Richard, we got together and we actually listened to and watched a 10-hour seminar that Nelson hosted back in the early 2000s. So I didn't get to meet Nelson personally. I did have a phone call with him once. I didn't get to mentor under him directly, but I did get to watch that seminar and break it down with my colleagues here. And it was just a great learning experience. And prior to this, of course, but when I first started learning about this concept, something that really stood out to me was that we cannot get a better rate of return by investing into anything without first controlling the function of banking as it relates to our needs for financing. Think about that for a moment, without first controlling the banking function. Now, people believe that they need someone else. They need someone else to take care of their money. Most people believe that it's necessary to put their money at risk in order to grow it. And I'm here to tell you that that's just not true. Of course, we can take risk and we can win, but we don't need to do it. There certainly are other ways to do it. Most people know next to nothing about the process. The key word here is process, the process of banking and its importance to their lives and their well-being. And when I say well-being, what I mean by that is my old football coach back in high school, he told me, he said, Vern, money doesn't buy happiness, but it certainly makes life a heck of a lot easier. Amen to that. Am I right? Now, here's the truth. Truth number one is the difference between you getting stressed and staying relaxed financially is who controls the banking function in your life. Truth number two, you don't have to put your money in a prison for decades and rely on someone else to achieve the financial abundance that you deserve today. And truth number three is you don't have to be rich to become your own banker. We work with people from all walks of life and everyone starts at a different place. I always say to people, it doesn't matter at what level you start. It matters that you get started. That's all that matters. Now, who is this for? You may be listening to me right now going, well, yeah, that's all great, but who's this actually for? Well, guess what? It's for you. Everybody has the need for the use of banking and everybody has the need for the use of money until you leave planet Earth. So this process of becoming your own banker, the infinite banking concept, it's for you. Now, it's important for us to have an idea of how the infinite banking concept came to be. I'm so connected to this story because I love the way that Nelson actually discovered this process. It wasn't just a good idea. You may be familiar with what happened in the 1980s, the early 1980s. Inflation skyrocketed. Interest rates peaked at 21.5%. And at that time, Nelson was, but prior to that, rather, he was doing quite well in the real estate business. He was buying property and flipping property. He was, buying rental properties, and he was taught by all the financial gurus, hey, look, all you have to do is go and access OPM, other people's money. You just can access other people's money. You buy that property, you hang on to it. You're on the hook for the interest while you hold on to it or until that cash flow starts flowing in. But once you sell off the property, hey, you pay off the bank and you get all the profit. Everybody wins. The problem is that nobody told Nelson what would happen if the interest rate lever went the other way. And that's exactly what happened to Nelson. He had $500,000 of debt, $500,000 of mortgage debt that he owed to banks and finance companies in the early, 1980s. And he was literally on his knees praying at night for a solution. Now, Nelson actually had the solution to the problem right under his nose. He just didn't see it. So it took some time for him to sort this out. He actually said, it hit him like a bolt of lightning or like a baseball bat between the eyes when he discovered it. He was paying 23% interest to banks and finance companies, because this rate that I'm showing here is the prime rate. He wasn't prime. He was paying 23%. So you can imagine the cost of that and the stress of that would keep anybody up over a period of time. And so I really feel that he had to go through that. I'm really blessed and grateful that he went through that, because it was what drove him to do the thinking that was required in the prayer and discover that he had already been paying large life insurance premiums. He had permanent participating whole life policies in place already. And he realized that he could access capital from the life insurance companies, no questions asked, via something called a policy loan, where he could be more in control of the payment schedule. And so he started accessing those policy loan values so that he could pay off what he called the snakes and dragons at 23.5%. So that's where really what gave birth to the infinite banking concept. Now, everyone needs a heart. Would you agree? At some point in the 1980s, I want to tell you a story here. Now, at some point in the 1980s, Nelson actually had to go to the hospital, and he had to do something called a quarter bypass. He had to get his heart replumbed. So he actually had his chest cavity opened up, and they removed his heart from his chest, and they hooked him up to something called a heart and lung machine. And it was the heart and lung machine that kept him alive. Now, of course, Nelson didn't remember anything about this, the procedure, because he was heavily sedated. But what he recalled about it afterwards is he said, at that time, I wasn't really living. I was merely existing. And the heart and lung machine, its job is to circulate the blood through your body to keep you alive. And what he said was, when you're not controlling the banking function, it's the equivalent of living off a heart and lung machine financially, because somebody else is pumping the heart in your financial life. Now, many people don't take the time to think about what I'm about to say here. Banking is the most important business in the world as it relates to finances, at least. It's the most important business in the world, because without banking, nothing happens. See, the banking system pumps money into the economy where it's needed. And at some point, some of that money is going to flow through your hands and mine, right? Now, again, Nelson always said it's important to actually think. In fact, we need to rethink our thinking. So while we go through this tonight and we talk, I want you to be thinking about this. Where does it all end up? It flows through your hands and mine, but where does it all end up? Right back in the banking system. You see, just like there's only one pool of water in the world, if you look at the globe, you can see the Indian Ocean and you can see the Atlantic Ocean, but obviously it's all connected, right? There's rivers, there's lakes, there's streams. Some of that water is going to flow through you and me. The clouds is going to pick that up. It's going to move it all around the world, but ultimately it all winds up right back in the same pool, which is the oceans, right? And so it's no different with the banking system, the money system. There's only one pool of money. It's inconsequential if the loan comes from a bank in China and maybe they lend money to a bank in the UK, somehow that winds up in Canada. If you go and access a loan from, let's say, TD Bank as an example, you take that loan and you go and buy some furniture. Well, what's the furniture store owner going to do with that capital? Well, they're going to deposit it. They're going to deposit, let's say, in CIBC. Well, it winds up right back in the banking system. So Nelson's issue wasn't that he had to pay 23.5%. It was that he wasn't controlling the banking function. Somebody else was controlling that function and telling him what he had to do. So that's what he realized. Now, the issue is here, how much of the banking function do you control as it relates to your needs? Remember, there's only one pool of money in the world. And what Nelson saw was that he was pumping money into that pool the wrong way. He had to, he had to go through the banks and toll takers and gatekeepers who were all, making money off of him and abusing him. Let me ask you, has that ever happened to you? He realized that he needed to crank up large life insurance premiums. As I mentioned earlier, he was already had some policies in place. He needed to build his system of policies so that he could access the capital and get rid of the banks for good. Well, you can't do that overnight. Everyone thought that he was crazy at the time, even his wife, Mary. So he would, if he liquidated a property or if he came in a windfall of cash, instead of paying off the debts immediately, he would crank up policies, and he had to wait a few years before he could start accessing capital to start firing or starting to get rid of the bankers. And so you have to get this done incrementally over time, because the function of banking is not a set it and forget it or an overnight thing. You're going to be practicing or banking and using money for the rest of your life. So it's something that is incrementally built over time. Now we're going to break this down. We're going to talk about what's called the 4 characters in the financial play. Anything that we do financially, there's 4 characters in the financial play, because anything that you do financially today starts with the process of banking. Okay. Now you're accustomed to being the depositor. We're all depositors. And you're also the borrower. Now, something we'll talk more about later is that you're always using borrowed money. You're either borrowing money from somebody else and paying interest to them, or you're using your own cash and you're giving up interest you otherwise could have earned on that money. So Nelson taught us that you're always using borrowed money. Now, the next character is the banker. What does the banker do? Well, the banker is the one who grants you access to the capital. The banker is the one who sets all of the terms and decides whether or not you're going to be able to accomplish your objective by accessing the capital. And the last character is the bank owner. Well, who's making all of the money? The bank owner is making most of the money in this entire play. They're earning the interest off the payments that you're making. Okay, so there's always 4 characters in the financial play. Remember the golden rule. People abdicate the responsibility or the opportunity that pertains to the banking function in the economy. They abdicate that. Someone else controls it. They're depending on someone else to perform the job. And that character in the play is making most of the money, and rightly so, because of the golden rule. Those who have the gold make the rules. It's as simple as that. The person on the street in Canada today understands the subject so poorly that he or she is doing the equivalent of living off a heart and lung machine. You're not living financially, you're merely existing. And when I say they understand the subject, I mean the process of banking. Nobody thinks about banking. Nobody talks about the cash flow and how to change the direction of the flow of your money. And that's what we're going to talk about more tonight. Now, what I want to talk to you about tonight is how to create a system in which you can control everything about the banking function as it relates to your needs. You can do everything for yourself that you're already using the commercial bank to do. Now, I'm sure you've seen this book before. Obviously, I just held it up earlier on today. This is a book that Nelson self-published in the early 2000s. There's been over 470,000 copies of this book sold. Why? Why? Because it works. It's as simple as that. That many copies have been sold because it works. Now, I encourage you to get a copy. You would have already been texted and I believe emailed as well a link that will take you directly to the ordering page where you can order a copy. We ship the book anywhere in Canada. And regardless if you move forward with this process or not, I promise you'll get a ton of value out of it, and it'll be definitely a good add to your library. And if you are considering this process, it's an absolute must read. You must read the book. And as Nelson would say, one read just won't do the job. I've read the book myself probably more than 10 times, and I know my colleagues commit to reading it quite often as well. And we refer back to it often with our clients because Nelson left this as a gift to us to guide us. Now, this is directly from Nelson's book. The very first principle that must be understood is that you finance everything that you buy. Remember, it's all about rethinking your thinking. You finance everything that you buy. You either pay up interest to someone else because you had to tap into their pool of money, or you give up interest that you otherwise could have earned. right? Because if we can keep our money in some sort of account where it can continue to earn interest, we don't interrupt that growth. As soon as you spend that money, it's a permanent transfer of capital away from you and your family forever. There are no exceptions to this. There are no exceptions. The whole idea is to recapture the interest that one is paying to banks and finance companies for the major purchases that we need during our lifetime. And obviously the lost opportunity cost on our money as well. In fact, we can use this for major purchases, but there's nothing that we can't finance using the process of becoming your own banker, including your own living expenses. And again, not going to get there overnight. It has to be done incrementally over time. The objective is to keep the money in the family. That's something else to think about, is that, everybody grows up and you get your mortgage and your house and your car payments, and then we're always sending that money away from the family. What if there was a way that we're already doing it all anyway? We're already accessing money and needing the use of money. What if there was a way to keep that money in the family and create indestructible generational wealth? That's another benefit of the process of becoming your own banker. And that's what we're creating here. The question is, how much of the banking function do you control as it relates to your needs? So you're going to hear me say this throughout the night. Repetition is our best teacher, and it's something to think about. Your money must reside somewhere. It actually has to be deposited. It has to have a home. It has to have an address. It must reside somewhere. It may as well reside in a system that you own and you control. Someone must perform the banking function in your life. And that someone, it should be you. Now, this process is not an either or. A lot of times, I'll talk to people and they'll say, hey, yeah, well, what about, becoming your own banker compared to, oh, maybe I should do real estate, or maybe I should put it in index funds, or maybe I should, do this, that, or the other. We're taught to live in an or paradigm. We're going to shift to an and paradigm. Becoming your own banker is not about addressing the yield of an investment. It's all about how we finance things that we need in our life, which certainly can include investments. Because again, we finance everything that we buy, and everything starts with the process of banking. So this isn't an either or. It's, I can become my own banker and I'm going to pay off my debt. Not or, I'm going to become my own banker and I'm going to invest in real estate or crypto or whatever it is that you want to accomplish. You can do anything that you want to do financially, you can do it by implementing the process of becoming your own banker. Getting into is this slide supposed to be in here? The grocery store, what's happening here? That might be what you're thinking right now. Getting into the grocery store business. Well, we're going to talk about the grocery store business for a moment. Getting into the grocery store business. The reason why Nelson uses this example and he taught us about the grocery store business is because he wanted us to consider a business in which we are both a consumer as well as a seller of the product. Much like banking, somebody needs to perform that function. We have the need for the use of groceries. We have the need for the use of money, and someone needs to perform the distribution function. Just like at the grocery store, someone needs to distribute the capital, and we all have the need for the use of capital. Some other reasons, what we want to do is we want to study the business. We want to study the business for a couple of years so we get to know it, right? If you're going to get into the grocery store business, you're going to learn about it. You're going to get some mentors. You're not going to jump right in. You're going to study for a while, just like what you're doing here tonight. Just like what we talked about earlier, you're going to take the time to actually learn about the banking process and the process of becoming your own banker. We need to purchase a superior location. What do they say about real estate? It is all about the 3 golden rules: location, location, location. You need to build an attractive building, and you need to stock it with high quality merchandise, because that's how you're going to attract those captive customers. The grocery store. Now, in the grocery store business, there's not a very high margin. You have to turn the inventory 15 times just to break even. If you can turn it 17 times, you'll be profitable. And if you can turn it 20 times, you could retire early. Okay. So think about that. In the grocery store business, the inventory has to be in constant motion. Well, just like in the banking business, it has to be in constant motion. So we need to turn those dollars over. Okay. Now this is our grocery store. You can see here that we have our back door where our inventory comes in, the back door, and then the customer will take that inventory, pass the cash register out the front door for 60 cents in this example. Now, more inventory comes back, because when the 60 cents comes in, when the customer buys when the customer buys the groceries, they're pumping money back into the grocery store so that we have more capital to buy more inventory so we can create more profit. Now, I'm lucky because in my family, my wife does the grocery shopping. And so let me ask you this question, and maybe we can get some audience participation here. If my wife does the grocery shopping, do you think that she's going to go down the street to a different grocery store? Or is she going to shop at home and shop at our grocery store? What do you think? Down the street or our grocery store? Let's see if we can get some answers here. Don't be shy. Oh, here we go. Our grocery store, your own. Okay, great. Any more? You're absolutely right. It would be equivalent to theft and stealing if my wife went to somebody else's grocery store and took that hard-earned money and pumped it into their grocery store. So of course, we're going to, purchase the groceries in our own grocery store, right? In this example, the grocery store, we have to purchase at wholesale. We have to purchase the cans of peas for 57 cents and we're selling them for 60 cents. So the profit margin is very low. So we need to turn that inventory a lot of times. Now, here's a really important question, and I want to get some more participation here. Somebody said Costco. I want to get some more audience participation. If my wife is at the grocery store or you do the grocery shopping and you fill up your grocery cart, now you're the business owner, right? You're the boss. You can do whatever it is that you want to do. You get to make that decision. Which door are you going to exit the store? Are you going to go out the back door? Because you could choose to do that. Or are you going to go past the cash register like everybody else and pay the retail cost for the groceries? Just write front or back in the chat window. Let me know. Somebody says front. Susan says front. Thank you. Derek said back, I think. Got a lot of fronts here. Front door. Front door. Okay, great. We have a lot of smart people on this call. Now, again, something to think about. Business owners will often convince themselves that, hey, I'm the business owner. I can do what I want. Of course, it's nothing wrong with taking advantage of goods and services from your own business, but you're actually stealing from your own business if you go out the back door, because you can see I'm paying wholesale for 57 cents for this can of peas. If I go out the back door, I have to turn the can of peas 15 to 20 times just to make up for what I used. I'm actually stealing from my own business. So this is what Nelson taught us. We want to put more money into our own system, into our own grocery store, because if we pump more money into our own system in our own grocery store, we're going to have more capital to buy more inventory to create more profit so that we can reach passive income time early, or some call that retirement time. Like, think about that for a moment. See, it's all about keeping everything in constant motion. And if we go out the back door, again, we're stealing from ourselves. So imagine, what is your grocery store going to look like when it comes time to sell that grocery store? The business owner down the road, he's been going out the back door for 10 or 15 years, but you've been pumping more energy and more capital back into your grocery store. What is the books of your business going to look like in comparison to the competition? It's going to be a much more profitable business. Nelson told us, he said, once you understand the grocery store example, the rest of becoming your own banker is ridiculously simple. Remember this, don't steal the peas. Simple as that. Now, here's the problem. Wherever wealth resides, someone will try to steal it. Now, if we want to fix the economy, let's start with the $150 billion that Canadians saved during the pandemic. Toronto Star, December 1st, 2020. The deficit will rise to nearly $382 billion. Financial Post, November 30th, 2020. Statistics Canada is about to be required to have Canada's 9 largest banks and credit unions turn over highly personal data about their customers and not tell the customers. That means every deposit, withdrawal, bill payment, overdraft charge, credit card fee, mortgage payment, and more, essentially your life will be laid to bear for government and bureaucrats to look over. So this is pointing out, regardless of political leanings, why it's so important to privatize your wealth and create a system that you have total and absolute control. COVID-19 bill would allow would give liberals power to raise taxes without parliamentary approval until the end of 2021. National Post. So, who is the banker in your life today? Now, this is ridiculously simple. Let's walk through the process of what we generally do with our money. You earn an income, right? You earn an income, and that income gets deposited into someone else's bank. I say that again, you earn the income and that income gets deposited in someone else's bank. They see the money before you do. And do you think the banker is just letting that money sit still? Or are they putting it to work? They're putting it to work for who? Not for you and I. They're putting it to work for the shareholders of the bank to create more profit. And so they're using our capital to build their business. That sounds a lot like a problem to me. So you access the money, you pay your bills, and somebody else has already made money off of your money. And whenever you pay a bill or access that money, it's a permanent transfer of capital away from you and your family for the rest of time. You can never get it back. In other words, you're doing all the work and someone else is getting all of your money. How does that make you feel? Like this? Awesome. Okay, great. So what we're going to do right now is we're going to explore two different mindsets. Okay, what I'm about to share with you here, we can apply this to anything, but we're going to use the example of financing cars today. Okay, Canadians love their cars, and so I think, what is it, every 3 to 5 years we get a new car, right? Statistically. So what we have on the top is we have what we call a debtor. So the debtor, they realize, hey, we need a new car. What they're going to do is they're going to go to someone else's bank or the dealership, which is basically a bank, and they're going to have to jump through hoops and qualify for this loan. So they're going to go down below the zero line and they're going to make payments now. They're on the hook to follow the payment schedule. And for 5, sometimes up to 8 years in Canada now, we can go to up to 8 years for financing. So you're on the hook making that payment for 8 years. And just to get back to the zero line. And what happens at that point? Well, now you have an 8-year-old vehicle and you need a new vehicle now, right? So generally, we're just going to go right back down. And maybe you're making more money. Maybe things are better. Now you're even deeper in the hole because you got a fancier car. And now you're making those payments all the way again. And what happens at any point during that process if there's an economic downturn or you lose your job or something happens? Can you just call up the dealer and say, hey, would you mind if I cut my payment in half for the next year or so? Or you mind if I just stop them all together? You don't own the vehicle until you finish making the payments. So if at any point that happens, you're at risk of losing the vehicle and all the capital that you put into it. I mean, it's already gone anyway, but all that money that you paid is gone. Now, assume everything keeps going good and you make that payment, we get all the way to the end and we've permanently transferred all that money away. We had all those cars, but someone else has all of our money and we paid up all that interest and the lost opportunity cost on those payments to someone else. Now, this person is the saver. What this person does is they pile up money in someone else's bank. Say that again, they pile it up in someone else's bank, and that money is being put to work, obviously, again, for the shareholders of the bank. They pile up that money until they get to the point where they have the need and they have enough capital to satisfy that need. And then they draw their income or draw the money all the way down to zero. Now they got to start all over again. See, it's all about rethinking your thinking. This person has convinced themselves that, hey, if I put money into a savings account and pay cash for my car, I don't have to make payments. Well, how are we going to get more money in the bank account to save up for our next vehicle or next major purchase? Don't we have to, doesn't it look like much like a mirror of the debtor? We have to make payments back to someone else's bank to pile up cash so that we can go ahead and access the money to do our next major purchase. All the while, when we're accessing that capital, we're giving up the momentum on our money. It just keeps going up and down. And then if you look at the end here, they're a mirror of one another. The saver and the debtor basically wind up in the exact same place. Both methods are a permanent transfer of money away from you. Every payment that you make is like a deposit in someone else's bank. Just like I mentioned earlier about borrowing the money and buying furniture as an example. When we make payments, what are the people who are receiving the payments doing with that money? They're depositing it right back in the banking system. And that is the problem. The problem is that money is always leaving you. We need to find a way to reverse the flow of your money. You're not going to avoid the payments, but we can control who's actually getting the money and who that money is being put to work for. So the solution is becoming your own banker, the infinite banking concept. As I said earlier, again, repetition is our best teacher, something to think about. Your money has to be deposited. It must reside somewhere. Okay. So now here's what we're going to do. Let's have a little bit of fun. Can we have some fun? Can we get some audience participation? Now, this time I want to get a lot of answers. I need to get a lot of answers out of you. Okay. The perfect investment. Now, the only limitation is the 6 inches between your ears. Let's use our imagination here. A fun thought experiment. So if you could create an asset from scratch, the only condition here is that there are no drawbacks, no downsides, no drawbacks. What would it look like? So what are the attributes of this perfect investment? I'll share a couple to get you started, okay? How about a high rate of return? How about a consistent rate of return? Okay, let's see some participation. What are the attributes of this perfect investment? No taxes, liquid, tax-free. Attributes, no examples. I'm not sure what that means. Not taxed, zero risk, flexibility, access to cash, not losing your capital, low risk, security of investment. Okay, awesome. Can someone let me know, are you seeing, it's guaranteed, generational. Are you seeing these examples that I'm posting up? Can we see this? Can you see on my screen? Yep. Okay, great. Thank you, Kyle. Okay, excellent. Thank you everybody for sharing all of that. So, okay, so here are the most common responses that we get from people when we ask this question. So we have, conservative, safe, liquid, guaranteed, tax-free. Do these sound familiar? No market volatility, yields income besides capital gains, creditor protection, inflation protection, control, transferable. I think somebody said generational, right? Easy to manage, no hidden fees or penalties, reputable. So a good reputation, private. Okay. Now think about this for a moment. For the list of attributes, for your own various assets, where are you storing your capital? Simply identify which of the features from the list that your assets do well on, and which of the features do your assets fail to satisfy? Think about that for a moment. Where are we storing our capital? Now, this good looking guy here in this photo here is going to show you a surprise. The list of attributes most accurately describes a participating dividend paying whole life insurance policy. So let's break it down. First thing I want to do before I get a little bit into the tool and how it works is you have to understand that the process of becoming your own banker has nothing to do with a life insurance policy, has nothing to do with dividend paying whole life policies. Okay. It's a process. We talked about the process of banking. We have to deposit capital, we have to access capital, and then we make payments back with interest. Simple as that. Well, you could use a shoebox to create your own banking system. It's just that a shoebox is not a very good tool for the job. So the permanent participating dividend paying whole life policy is simply the best tool that we've been able to find so far for this job. Okay. So there's a process and there's a platform. And the platform or the tool is the permanent participating whole life policy, which is what we use to implement the process of becoming your own banker. So what does participating mean? Participating when it means that you become a part owner. When we're talking about what's referred to as a mutual insurance company, you become a co-owner in the life insurance company and you participate in the profits that are generated from all the lines of business. They have many lines of business. They have term insurance and universal life insurance and retirement plans. There's all kinds of money flowing into the insurance company, and you get to participate in all of those profits. Sounds a lot like a bank, right? Sounds a lot like the shareholders of the bank. Dividend paying. Now, every year when the insurance company posts a profit, the insurance company declares a dividend. Okay. It is contractually guaranteed to be paid to the participating policy owner, and it can never be repossessed or lose value. Let that sink in. Where are you storing your capital today where it's 100% guaranteed by the insurance company? When I say 100% guaranteed, it means that the insurance company has all of the risk in the equation. It's up to them to fulfill on all the contractual obligations. So where are you storing your capital today? Excuse me. Where it's contractually guaranteed that it can never lose value. Whole life. What does whole life mean? It means that you are the life insured. And for your whole life until age 100. the total cash value, okay, so there's cash value in the policy that's rising. The total cash value must equal the total death benefit by the time the life insured reaches age 100. Every day that you age, the total cash value rises. The policy cannot lose value. So the cash value is always chasing that death benefit, okay? Participating dividend paying whole life insurance. We don't have many financial guarantees in life anymore. Pensions are going by the wayside. There's doubt about the future. However, dividend paying life insurance can help create peace of mind and unmatched financial security. Here's how. Cash value begins to accumulate immediately. So we don't have to wait 5 or 10 years. Cash value starts to accumulate immediately, and it's contractually guaranteed to grow daily. And the cash value can never go down. So every single day that I wake up, I look at my cash values. There's more cash in the policy that I have access to than there was yesterday. It only goes in one direction. Easy access and control over a growing pool of financial value you can use and take advantage of opportunities that will track you down. You're not penalized for accessing the money early like you are with, with an RSP or some other financial products. There are several tax advantages, both personally and corporately. So we can do this personally and we can do it corporately as well. And it provides a growing death benefit, which is paid to the named beneficiaries income tax free. So if I was to give you a visual here, which I will in a moment about the cash values, but think about the death benefit for a moment. The death benefit, I think, is really important, but we're talking about the living benefits of life insurance. The death benefit, it says it's growing over the course of your lifetime. So the death benefit's growing and the cash value is rising and chasing that growing death benefit. Well, I'm aging every single day closer to age 100, right? So that means the window of time that the insurance company has to fulfill on their promise, which is total cash value and total death benefit matched by age 100, that window is shrinking. So if the death benefit's expanding and the window of time is shrinking, that means that the accumulation, the daily cash accumulation within the policy over time can only go in one direction. And that direction is up. Talking about creating real momentum. Now, when we use a permanent participating whole life policy to implement the process of becoming your own banker, you become your greatest advantage. Well, what do I mean by that? Well, you're already earning income. You're already depositing it in someone else's bank. You're already, accessing that capital and replacing it, or borrowing money from somebody else and paying it back with interest. What if you could do all that yourself? You're already proven that you're a really good customer. Why not become your own customer? Become a wealth creator. So here we are, much like the example that I showed you earlier, we're depositing capital into our system. This green line represents our daily cash value growth. So it's growing and building momentum. Now, at this first green dot here, maybe we have enough capital in there it could be something as simple as paying your property taxes, or it could be purchasing a vehicle. You purchase a vehicle, and now you make your own repayment schedule and you start replacing the money, but you can see the green line never gets interrupted. It keeps on growing. You're just using your cash value as collateral. You're borrowing against it, and you're using that to purchase your vehicle. And now you're replacing the money, and you get to go back and re-access all the capital, the growth and what you pay back. Something happens in your life, you need to take a vacation, or something happens with the economy. If you want to change or modify your repayment schedule, well, who gets to make that decision? Well, you own the contract. You control all of the terms. You're the one who gets to control that, and you get all of the money. Creating your own banking system. That's what we're talking about here. You're literally creating your own banking system, not brick and mortar, but a system that can fulfill the function of banking. Well, we need to follow Nelson's golden rules. He left us some things to think about. The first one is think long range. He taught us to think 3 generations ahead. I'm already thinking about my unborn grandkids and my great grandkids. The decisions that I make today are going to dramatically impact their financial well-being in the future. Don't be afraid to capitalize. So we have to make deposits anyway. We have to capitalize our own banking system. Don't steal the peas, like I mentioned earlier, right? Always pay your money back to the policy and pay it back with interest. The more you pay back, the more you can get back out. Don't do business with banks. Now, something that a lot of people are not aware of, and you can go ahead and Google this if you want, the banking system operates under fractional reserve banking. That means that whenever we borrow money from the bank, it inflates the money supply. So it contributes to the inflation problem, losing value on our dollars. And this is a fifth golden rule that Nelson added at the end. It's rethink your thinking. You actually have to rethink your thinking. We have to learn and then, or have to unlearn and then learn again. Now, for individuals and families. So this is happens to be one of Jason's clients. His name is Dave Klein. And this is what I want to read to you. He says, 2 years after opening our first policy, we took out our first policy loan and paid off a bank loan on my wife's Subaru, redirecting the payments from the commercial bank to our family bank. So they redirected the payment. So they're now recapturing a payment. The cash flow didn't change. They're redirecting the payment so that they get to recapture it and reuse it. 3 years later, 5 years into their journey, we took another policy loan and skipped the bank entirely, this time using the money to buy a brand new SUV outright. In the 5th year, we also had another child and took a policy out on him, as well as a second policy on myself. With 5 policies now in force, after 7 years, our mortgage was coming up for renewal. Instead of renewing with our bank, we took out a policy loan from each of our 5 policies and paid off the mortgage. Isn't that fantastic? Now, again, I'm always saying that it's something to think about. Think about that. If you paid off the mortgage, well, you're already used to making that payment anyway. Well, now that money is coming back to the family. Think about a mortgage for a bank. For you and I, it's a liability. For the bank, it's an asset because it creates a stream of payments. So if we can take that bank mortgage, that third-party debt, and we can transfer where that debt resides, if it lives within my own policy system, it now becomes an asset because it creates a stream of payments that I'm in control of and that I have access to all those payments. Okay. The most common question, by the way, that we get from people is, can we connect with somebody, or excuse me, can we connect with the right person on your team to take a look at my financial situation and show me how to become my own banker? Well, the answer is a resounding yes. You have a Becoming Your Own Banker call designed for that reason. As I mentioned earlier, you would have already received a link for this and a text message, right? A text message and an email where you can schedule a call, or you can text the word schedule to 780-809-4599. And maybe, oh, there we go. One of my great colleagues has put that into the chat box. So thank you so much for doing that. So go ahead and schedule your call, because get your questions answered and help understand how this process works for you. Now, I know, and you should know deep down, that you are capable of becoming your own banker. Here's the follow-up that you can expect from us, okay? We'll stay in touch via email, and obviously you can unsubscribe at any time. You'll receive an invite to schedule a time to meet. And if we don't hear from you, the right advisor on our team will extend a courtesy call to find a mutually convenient time to meet. And of course, if you don't want to meet, you simply just let us know. And as long as you leave happy, then that's okay too. All right. I'm going to actually share another example with you here, another sort of case study. Okay, so now this one comes from Alan and Janet Antonio. And here's what I want to share with you. After 3 years of building our policies, we already acquired enough cash value that we could withdraw enough money from our policies to pay off our bank mortgages on our rental real estate 13 years early. That was a huge accomplishment, knowing that we were now really using IBC, the infinite banking concept, as it was intended. Think about that for a moment. When you become a real estate investor, there's nothing wrong with that. That's great. But you're the first one in the deal. And who has all the risk? You. And who gets paid first? The bank. So now they get most of the money. In this case, now all of that payment is now coming back to the family. Now, this is really powerful to me. When our oldest daughter and son-in-law decided to purchase their first home, they were able to access a policy loan from her policy that we started, and also funds from our own policy to buy their home as a cash deal. So the entire mortgage lived within the family banking system, not having to have a mortgage from a traditional bank, not having to jump through all those hoops and to qualify and to deal with all the rates and all that talk. No, they skipped all of that altogether and they negotiated their own repayment schedule. Currently, they are making payments back to us for the loan instead of the bank, thus keeping with the idea of keeping the money in the family. Think about how powerful that is for a moment. Keeping the money in the family means that if the daughter has some sort of a problem down the road, or if she, needs to change her repayment schedule or whatever that is, you can make sure that your family never has a bad financial day ever again. And the daughter knows, because she's following this process, she's learning about it. She knows that she's going to get all that money back one day and then some. When the parents pass on, they're going to leave a large tax-free death benefit. And that death benefit's not going to get squandered like most inheritances, because the daughter's already practicing the concept of becoming her own banker. She knows exactly what she needs to do with that money. She's going to backfill her own policies and pay off any policy loans that are outstanding. And then she's going to start more policies on her kids and her grandkids and so on, thus keeping all of that wealth and all of that momentum in the family. Now, let's compare how 99% of Canadians in the public buy cars to becoming your own banker. Each of these methods require an ongoing payment, a constant transfer of capital away from you. That's what matters. It's not about the rate. It's not about any of this stuff. It's money flowing away. So there's the no purchase plan, which is a lease. There's the post-purchase plan, financing. You don't actually own anything until your final payment. I literally just had this conversation earlier today with my daughter, and it was amazing. She's 11 years old, and I'll share more about that in a moment. But you don't actually own the vehicle, because if something happens, if the payments get interrupted, they can come and get your vehicle. Now, there's the pre-purchase plan. Like I said before, saving and spending cash. You're piling up that money in someone else's bank so that you can make basically one balloon payment and transferring all of that financial energy away from you forever. With each of the methods above, who is getting the money? Have you ever stopped to ask yourself that question? The problem that you have is not that you don't, the problem that you have is that money is leaving. That's the problem. Who's getting money? If the money was flowing back to you and your family, you'd have more capital to do more things with. And the answer is someone else's bank. Let's see how Al Bundy feels about that. Okay, a couple questions. How many vehicles have you and your family purchased in your lifetime, either by cash, lease, or financing? Actually, let me ask that right now. Can I take a minute here? I'm not sure how I'm doing for time, but how many vehicles have you purchased? Go ahead and just get some audience participation. 5. Derek's purchased 5. By the way, we're at 3. Okay, only 3 for me. 10. My goodness. 4. We have 3, 4. What are we at? About 30 now, close to it. How many more cars have we gotten? Kevin says 4, 6, 9, 7, 10. Wow. Okay, great. I'm gonna stop it there, and I'm gonna say we have 50 cars. Okay, 50 cars, and I'm gonna say an average of 30,000 per car. Okay, so 50 times 30,000, it's $1.5 million. So that's $1.5 million of capital that's been permanently transferred away. All of that financial energy has been transferred away from you and your family. Now, how many more vehicles do you plan on purchasing? People are likely to spend more on financing vehicles throughout their lifetime than they're ever going to save for retirement. That's why people don't really get the opportunity to spend their life living, because money's always leaving. Now, here's a story about this guy, and I have a huge milestone to share. So August 2021, that's just recently here. I had a $34,000 car loan, truck loan outstanding. What I chose to do was 2.5 years ago, I purchased this new vehicle. Our family needed a new vehicle, and I had a plan in place. I didn't have the capital at that time in my banking system to be able to finance the vehicle through my own system. I was still very much building, as I still am today. And what I did was I continued to capitalize my system and build it up. And what I did was I stretched the loan out over 8 years, which is normally bad advice, but I wanted the payment as low as possible, the least amount of money flowing away, knowing that I was going to capitalize my system. And so at first I chose to finance it, but 5.5 years early, I'm using the process of becoming your own banker. I paid off my truck loan, and now me and my family own the car outright. And that's what my daughter and I were talking about. I said, did you know, we didn't actually own that truck until just recently. I said, because if we stop making the payments, they could come get it, but now we own it. And she was just so excited. And I said, by the way, who's getting the money? She said, we are. I said, you got it. So what's the lost opportunity cost of choosing one option over the other, paying cash, leasing, or financing? Okay, here's the process. This is what we need to pay attention to, is the process. I capitalized my policy system. So don't be afraid to capitalize. The money has to reside somewhere. I requested a policy loan for $34,000. I didn't have to do an income verification, credit check, repayment schedule, none of that stuff. It's up to me. I'm the banker using my cash value as collateral. So don't do business with banks. The insurance company placed a lien against the death benefit for the balance of the loan, while 100% of the cash value continues to grow uninterrupted every single day. Now, I control the repayment schedule. Okay, I decided to repay my policy loan at $700 per month. So I bumped up my payment even a little bit. I'm going to do that over 60 months. I'm going to put $42,000 back into my system. I get 100% of the money back. So if I get all the money back, why would I object to paying even more back into my own system? So every loan payment that I pay each month, though, of $700 into my banking system, I'm able to access $1,000 out of my policy. Take a minute to think about that. Think about what I just shared and let that sink in. Don't steal the peas. Because my capital is growing uninterrupted every single day, I have access to more capital as I'm making my payments back. Now, heaven forbid something were to happen to me. My family receives a death benefit minus this outstanding loan balance, and they still own the truck. So we are thinking long range and making sure that my family never has a bad financial day. Where did the money come from to buy the truck? Who owns the truck and who is getting the money? Well, the money came from the insurance company. I use the insurance company's money to pay off my truck while my money grows every day. And now I'm the one getting the money back because I can reaccess it, and I'm a co-owner in the business. So all that money is being put to work for me and my family and all the other co-owners. What happens if I choose to stop or modify my loan repayments? Well, that's completely up to me. And how much of the money that I put toward the policy loan repayment do I get to use again? Like I said, all of it and more. I get the truck, I have all the money, and I recapture the interest that I otherwise would have paid to somebody else. Now, if you can do this with cars or my truck, is there anything that you can't do this for? Rethink your thinking. The answer is no. You can do it for anything that you have the need for the use of money for. When can I access a policy loan? Do I have to pay interest? Well, when I access a policy loan, do I have to pay interest? Well, think about that as well. If you and I were in business together and we had a pool of capital in our business, and I asked you, hey, I need to access some money from the business, are you going to let me access money out of the business for free? The answer should be no, because if I take the money out of the business, then that means the money's not working in the business to grow more profit. So I should pay it back with interest. Remember the grocery store? I'm putting more money back into the policy. I'm paying interest on the policy loans, but I get to, all that money is being put to work for my family because I'm a co-owner. And also I get to reaccess all that capital anyway. So I don't have a problem with it. I don't care about the rate. I don't think about any of it. Now, personal guaranteed retirement solution. Here is a Nasia. This is a case study. So Nasia had a very clear and specific objective. She wanted to obtain $39,000 of net after-tax retirement income from age 65 until age 90. She deposited $30,000 into a dividend-paying participating whole life insurance policy for 10 years. Now, I encourage people to continue to deposit premium beyond that point, but in this case, she deposited it for 10 years because this was her specific objective. A total of $300,000 goes in as premium. From age 65 to age 90, Nasia is going to access $39,827 income tax-free. So she's going to take out over $1 million. She's going to take out $1,035,502. And Nasia passes away at age 90. She's going to leave over $500,000, $586,682 to her beneficiaries tax-free. So if she lives a very long life, she gets every dollar out and more. If she dies prematurely, God forbid, there's going to be a big death benefit left to her family so that they never have a bad financial day. So ask yourself, is it easier to save $300,000 in an insurance policy, or is it easier to accumulate over $1 million inside a mutual fund or an RRSP? Something to think about. For investors and business owners, this is Tim Dawson. He's a senior partner at a CPA at MMP. And it says here, I'm just going to read a couple of lines here. He says, thank you, Jason, for continually pushing me to in this direction. In other words, rethink your thinking. So Jason coached him and taught him how this process works. Over the past number of months, Jason and I have spent numerous hours identifying clients where we saw a specific need or an opportunity. Then the process started. I'm going to read, you can read the rest of it here. We're going to read down here. It said, I would not hesitate to put Jason in front of anyone. He's a real expert in this field. And that goes for all of our coaches on our team. We're all ninjas at this process. Okay. Now, business owners, we can do this personally. We can do this corporately. Now, this is Dylan. Dylan's 45 years old. His objective is to access $41,000 of net annual retirement income from age 65 to age 90. The corporation, not Dylan, the corporation deposits $50,000 into a corporately owned dividend paying life insurance policy for 10 years. So that's a total of $500,000. The corporation, the corporate tax on the daily cash value, $0. Passive income tax on the cash value, $0. From age 65 to age 90, Dylan is able to access $41,005 per year tax-free. The total amount, $1,066,130. Dylan passes away at age 91. He leaves an $806,717 death benefit to his family, tax-free. Now, Dylan's death gives rise to something called a capital dividend account in the corporation. This is a notional account, and it has a credit. The death benefit in this example is $806,000, but the capital dividend account credit is $3.5 million. So the capital dividend account, you can actually flow additional assets through the capital dividend account out of the corporation tax-free. So understanding that your wealth must reside somewhere, did this policy take away any of Dylan's options? I would say no. In fact, it gave him more options. So think about your kids, your grandkids, and your great-grandkids. We've been taught to be divisive in our family. You're going to get your own mortgage and your own car and your own this and your own that. Well, the wealthy don't think that way. They circle the wagons and find ways to keep the money in the family. And oh, well, here's my crazy Uncle Gleb. We don't invite him to the vacations and the reunions anymore. I just love this picture. It's hilarious. Now, this right here, I stole this picture from Jason. This is the gold standard as far as I'm concerned as it relates to family banking. This is, I think it's 17 members of Jason's family. Every single person in this photo is life insured. And you can see on the t-shirts there, it says annual family banking meeting. So this is, I believe it was also a vacation. How many people are having family banking meetings, getting together and discussing how they're going to use the money, how they're going to grow the system? All of the third-party debt for all the members of the family now, it resides inside the family banking system, and all that money is coming back to the family. So this is something else that we coach our clients on and that we can create with this process. Over the course of your entire lifetime, think of all the money that leaves your family for the things like mortgages and investments and cars and properties and weddings and taxes and all the things that we need to pay for, sports and hobbies. I mean, my kids are at parkour right now. Add up all the money that you've earned and spent, to this point in your life. That's a lot of capital. Could you write me a check for that amount right now? Have the banking process work for you rather than against you. It's a great quote from Jason Lowe. Now, you don't have to, get a policy or a system of policies from us. There are a lot of people, great people out there that you can work with. But please don't do this alone, okay? Please don't do this alone. Households and business owners who do this right have a good coach. I recommend that you get a coach. Much like I mentioned about my story earlier, things didn't happen for me until I got the right coaching and mentorship that I needed. Wayne Gretzky, widely regarded as the greatest hockey player to ever play the game, had a coach his entire career. So if Wayne Gretzky has a coach, why don't we have a coach for the things that we want to accomplish in our lifetime? It makes no sense to me. And when you choose who you're going to work with, here are some things to think about. Number one, you've got to be careful which life carrier you put the policy with. To ensure that your policy is designed properly. See, there's many different types of insurance policies. You can structure them 1,000 different ways, much like buying a car. There's lots of different vehicles. This is a vehicle in this example. You have to structure it properly for banking. Most people who are selling life insurance don't have expertise in this area. So make sure you work with somebody who specializes in the becoming your own banker process. You should choose somebody who is an authorized infinite banking practitioner with the Nelson Nash Institute. You can go to infinitebanking.org or just Google Nelson Nash Institute, and there's actually a practitioner finder on there. Every one of our team members is listed on the Nelson Nash Institute as an infinite banking practitioner. But here's what that means. It means, like I mentioned earlier in my own story, we go through a rigorous study and a training program to get our certification. And then you actually have to go through a mentorship program to work with somebody closely so that you can learn how to deal with clients and how to help them implement this process from A to Z. So it's not just, it's an actual process and a program. In order for you to keep good standing at the Nelson Nash Institute, this is all monitored and documented. So it's an entire training program and a process, because this is a very specialized niche that we specialize in. Now, the reason you should do this in your life now is because you deserve the outcome now. You deserve it. A peaceful, stress-free way of living. The old adage about, when's the best time to plant a tree? The best time to plant a tree is 20 years ago, but the next best time is right now. We can't go back. The longer you wait, the more you penalize yourself. The real questions are, what's the cost of doing nothing? Because that is a decision. That is an action, doing nothing. What's the cost of just one more year of all your money leaving your family and your business permanently? Permanently, you work for it and it leaves permanently. What's the cost of giving up all of the interest that you are on the money that you could have earned otherwise? Lost opportunity cost calculator. They're easier to find, and it's a heck of a visual to give you a wake-up call. I encourage you to schedule your call with us. It's included with the webinar. Okay. So just to recap, we have, the difference between you getting stressed and staying relaxed financially is who controls the banking function in your life. You don't have to put your money in a prison for decades and rely on someone else to achieve the financial abundance you deserve today. And you don't have to be rich to become your own banker. You just have to take action. You have to get started. This process looks awesome, but how will I know it's for me? How will I know it will work for me? Excuse me. Again, schedule your discovery call. Here's that slide one more time. Click the link that you received through text or email, or text the word schedule, 780-809-4599. This all sounds great, but I don't want to be alone. I don't want to do it alone. Well, I'm going to expand on this in a moment quickly here, but this is a quick look at all of our wonderful coaches, are my great teammates, my friends, my colleagues. God bless you guys. You will get a lifetime of mentoring and quarterly group coaching sessions. Okay, so we actually get together. We're building a community here of clients. We had a coaching session a couple of months ago, I think it was now, and I think we had well over 100 clients, actual clients, practicing this concept. And now we have a lot of resources. I'm going to go ahead and share my screen with you here again, and I'm going to show you some of the resources that you have access to when you become a client with the Ascendant Financial team. This is our YouTube channel, the Banker's Vault. So you can go to the Banker's Vault. I encourage you to go ahead and subscribe to our YouTube channel. And you can see all of the videos here, all these resources from my awesome colleagues, and there's so many resources here to help you expand your learning and learn more about the process of becoming your own banker. At Ascendant Financial, we have, like I said, our great team of coaches and advisors here. Many of the faces you probably recognize. We have a fully licensed client service team. They're responsible for all the back end work. They help us with all of our applications and keeping the process rolling for our clients when we do our applications, that sort of thing. We have our operations team, the great and powerful Devin Borsboom here. He's responsible for all the excellent automation and follow-up that you're receiving. And the rest of our team here keeps things going in the background. Our strategic assistants, it's all about staying in your unique ability at Ascendant Financial. So our strategic assistants are in their unique ability, and they help us stay in our unique ability. So they take care of those things. Now sometimes we deal with complex cases. We deal with estate planning and business cases. So we have some strategic partners, as we mentioned earlier, Tim Dawson and Frank Abate. He's a trust and estate planner, a certified financial planner, and a CA. So he'll help us position estate planning cases and cases inside of a corporation. We have a compliance officer, Dan, God bless you. He's one of our coaches, but he also helps make sure that we do everything on side and our client files are impeccable. And Moses is responsible for our campaigns and things like that in this beautiful website that you're looking at. And God bless these three gentlemen right here. They say, look up, because they're giving all the credit to the people above them. So that's wonderful. This is actually the Ascendant Financial Client Portal. So we've built a client portal to empower you to become your own banker. Right. So constantly learning and learning more about it. So we're here to coach you and support you, but it's also, it's called your own bank. So you're going to become your own banker. We have the get started section here where you can learn more about your policy and how it's structured and those sorts of things. Take a deeper dive into FAQ and learning resources, coaching, events, case studies and webinars. And we also have an admin guide here with the most frequently used forms and also a step-by-step guide and instructions. So if your advisor is away, or if you just want to take that upon yourself to do that, you can do that. We also have a bookstore here. There's a lot of great resources. Again, you've been already emailed and texted a link to purchase Nelson's book. I encourage you to do that, but there might be some other ones that you find of value. And I'll go ahead and show you this here. You can see this is for the Edmonton area, but also this is a resource to you. Go ahead and look up some of the Google reviews. You can see here we have just under 160 five-star Google reviews in the Edmonton area. It's done by geography. So if you're in Calgary or a different area of the world, you'll see a different number, but you can Google Edmonton as well, and you can find these resources. So I encourage you to do that. Take advantage of the resources so you can determine for yourself if this process is going to be a good fit for you. Okay, now there's another resource here for you. You should learn a bit more about who Nelson was and what he stood for. So go to nelsonnashfilm.ca. You also would have received a link to watch this documentary that Jason and Richard had commissioned on Nelson to tell about his life and who he was. And he says, if you understand the problem, the solution becomes clear and you will know exactly what to do. So spend some time understanding the problem. These are just some of those Google reviews that I showed you online there. We just share these as an example. Now, if all this process did was help you keep more money in your family or in your business, would it be worth it? If all it did was help you create a peaceful, stress-free financial life, would it be worth it? Now, the power of commitment. I heard a long time ago, a gentleman by the name of John Assaraf, I heard him say, there's a difference between being committed to things and being interested in things. It's just like what happened to me. I got committed and everything moved out of the way. I was interested before that. When you're interested, roadblocks and challenges get in the way and stop you from getting out of life what you want to get. So if you get committed, you can absolutely do this. You do have options though. The first option is to do nothing, and nothing will change, and you'll continue to work your butt off for banks and finance companies, and everyone else will continue to get all your money. Option number 2 is you can schedule your discovery call and take a hold of your personal finances and put control back into your hands. If you're committed, what would you do? Are you committed? Are you committed to getting out of financial prison? I want you to picture a day. Picture a day when financial control is in your hands, not the banks, not the government, or a temperamental risky stock market. When your spouse says, thank you for not making me wait 30 years to enjoy the lifestyle that I want today. And I'm getting a little choked up because this conversation happened quite recently between me and my wife, and I love her dearly. When your finances are exactly where you want them to be, and you know with certainty that you have the freedom to travel when you want to travel, relax when you want to relax, and serve when you want to serve. You need the use of money and banking for the rest of the time. So nothing happens to the flow of money without the function of banking. It is an actual function. It's a process. You need to exchange money for goods, investments, and services that you need. Now, this is a great quote from my friend and colleague, Sarblo Gill. He says, in life, payments are not going to end, but you can certainly change who is getting the payments, who's getting your payment, and who is that money being put to work for. Now, we're right on time here, so I'm going to leave this slide up for a moment, and I'd like to leave you with this. There's so much wisdom in Nelson's book, and I'm going to read you something directly off of page 65, okay? He says, assuming that you are by now sufficiently convinced that this is the course of action that you would like to take, the question becomes, how do I get started? Schedule your call. The most important word that comes to my mind is desire. Without it, you probably can't do it. Remember Parkinson's law. So Parkinson's law says that work expands to meet the time allotted, expenses rise to match income. You got to whip Parkinson's law. He says, remember Parkinson's law. Everyone is already spending all financial resources on what he or she thinks is best. There has got to be some honest introspection at this point. You got to be honest with yourself. And a commitment to get out of financial prison must be a burning desire. I assert that if you're on this call tonight, getting out of financial prison is a burning desire.
I think, a lot of people sort of ask questions that are quite specific about their situations and questions around like the amount to put in a policy and things like that. And so back in the Q&A, I don't know if everybody's seen that, but we're sort of encouraging that would be things that you talk to an advisor about. So maybe you can address about premiums, Bern.
Yeah, no, that's a really great question, Liz. Thanks for asking that. And that's obviously one of the first ones that come up with people. Now, something to remember is that, look, the more I put into the policy system, the more I'm able to get out. As simple as that. However, it's important that you don't bite off more than you can chew. Okay. That's why we're here to help look at your financial situation. What are your specific objectives? And of course, it's up to you how much you decide to deposit into your policy system. It's not a specific number that you have to put in. We have clients putting in as little as $1,000 a year, all the way up to well over six figures, $1 million a year. So if you're somewhere between those two numbers, you can get started. And like I said earlier, it's not about how much you put in. It's about getting started. That's the key thing. You can always expand your system and add more later on.
Another really great question, Vern, is do you have to be the life insured to do this process?
I am so glad somebody asked that. In fact, I wanted to address that during the webinar, but I got on a roll, Liz. Yeah, the answer is no, actually, Liz. I actually own policies on every member of my family, on my wife and both my two beautiful children. So it's a legally binding contract. They're just the life insured. I'm actually the owner of the contract. So I own it. I control it. They're just the life insured. So you do not have to be the life insured. God forbid you can obtain a policy if you're not. There is a medical exam. Obviously, it's fully medically underwritten, right? Because that's how the insurance company assesses their risk, to make sure that we have healthy people and that there's premiums coming in for a very long time. We want that because that's how they grow that pool for us. But if I can't qualify personally, then I can certainly put a policy on somebody that I have a beneficial interest in.
Probably a bit of a follow-up from that is like, what ages qualify for putting a life insurance contract in place?
Another great question. Yes, you can get started as early as 15 days old. So we can put policies on infants. In fact, I am working with a family right now who literally just had a baby a couple of weeks ago. So we're going to get started here pretty soon. Maybe we'll take one more, Liz, if you got one more good one.
I think you answered a lot of them. Can you use this process to eliminate all sorts of debt, not just car loans, but like student debt, things like that as well? Credit card debt, other examples of debt.
Yeah, great question, Liz. Thank you for asking that as well. Yeah, absolutely. Like I said earlier, anything that you have the need for the use of money for, if you can do it for trucks or cars, is there anything you can't do it for? And the answer is no. Anything that we have the need for the use of money for. In fact, I'm blessed to say at this point that my family and I, we actually don't spend a single penny of our own money. We're always recycling the money. I'm using the policy loans for even my living expenses, and then I take my own income and I recycle it right back through my own policy system. Now, again, that won't happen overnight, but there's nothing that you have the need for the use of money for that you can't implement this process to achieve.